In this video, I want to compare two very popular VA programs, the VA IRRRL program, or IRRRL, and the VA Cash-Out Refinance program. As rates have been going down lately, we are seeing a lot more people request these programs and a lot of more people wanting to know what's the difference? When can I use each program? So in this video, we're going to talk about that. So let's start with the VA IRRRL or IRRRL, interest rate reduction loan. It is a VA to VA streamline program. And what that means is there's no appraisal on it. And also actually very little underwriting on it. Now there's technically, according to VA guidelines, there's no job required. Now that being said, most lenders will check job history anyway. They won't ask for pay stubs or anything. They'll just make sure you're still employed. But from VA standpoint, there's actually no job requirement. Now it's very streamlined, and that's why it's called the streamline, and which means the closing costs are lower. Literally, the only closing costs you'll have on this are title fees, which, I mean, you got to pay title anyway, no matter what you do. Title companies always want their money, and your filing fee. And your VA funding fee, if you do have a VA funding fee, it is reduced. So there is potentially a funding fee, but it is lower than it would be on a normal loan. And so that's the IRRRL program. Now let's compare that to the VA Cash-Out program. The VA Cash-Out program is exactly what it sounds like. It's if you want to borrow and pull money out of the house. You actually can borrow up to 100% of the appraised value of the house. Now, that being said, I typically recommend people actually go more like 80 to 90% of the value, because when you do that 100% or cash out, it is considered a riskier loan. And most lenders are going to charge more on the 100 than they do on the 90, but it's still an option. It is also still a full underwritten loan with an appraisal. And also, this program can also be used for converting other mortgage types of VA. So sometimes people buy a house, the conventional loan, or some sort of fix and flip loan, or all kind of other loans. There's other products out there that sometimes people use to buy the house instead of the VA loan for whatever reason they didn't get the VA loan initially. And so this kind of program can be used to change another loan to a VA loan. And so with that, it also is a full funding fee, and you have the full gamut of fees you need to pay when you do that cash out. But still, it's a great program. Now I dig a little deeper into all these different mortgage programs, and so check the links below. And so I have a full video about the VA IRRRL Streamline program, and also a full video about that VA cash out program. And so hopefully you can check out those videos, and look forward to seeing you in the next video.